Yo a donde ando pensando, puchi, que si mañana me sacan de la casa.
It's 6 in the morning, and like every day, Eliseo Guardado is on his way to his landscaping job.
Nos metimos en algo que no podíamos sacar adelante.
He emigrated from El Salvador and became a legal resident. Trying to fulfill his own American dream, he bought a house in Maryland just outside of D.C. and became one of millions who took out subprime loans they couldn't afford. Today, Guardado will plant trees and lay down sod until nightfall. But at the end of the day, he doesn't know if he'll have enough to make the payments on his $320,000 house that he bought with 2 loans from Long Beach Mortgage, the subprime lender owned by Washington Mutual. The story of this one bad loan helps to tell a bigger tale. How fraud in the form of loans which should have never been approved was at the center of the biggest bank failure in American history.
Well, Washington Mutual becomes the latest and biggest bank to fail after...
In 2006, Guardado wasn't even looking for a house when a real estate agent called him and convinced him to buy.
Al principio yo sentía de que tener una casa era imposible, pero como los realtors le dicen a uno, no, pues puedes comprar casa, puedes, con los ingresos que tengo, no creo que pueda hacerlo.
What Guardado didn't realize was that Long Beach Mortgage and Washington Mutual would give loans to people even if they couldn't afford the payments.
The uncertainty of getting a home loan made Paul irritable. Then he went to Washington Mutual. Thanks to their flexible lending rules, Paul got a quick approval. Now he's always in a great mood.
The power of yes, read their tagline. And for Guardado, who grew up poor in El Salvador, it seemed too good to be true.
Donde yo crecí, al principio recuerdo que no había ni energía eléctrica. Las casas eran de tierra. Cuando ya nos pasamos, pucha, qué diferencia.
Now it seems that Washington Mutual's lending rules weren't just lax, but that much of the business was built on fraud.
Este documento creo que es el contrato. Nunca los entendí.
Guardado was surprised to learn that his loan application said he made more than $8,700 a month. He claims he took home less than $2,000 and blames the broker for the figure. He signed a paper allowing the bank to verify his tax returns, but no one ever did. That meant Guardado, who installed drywall for a living, could buy a $320,000 fixer-upper with no money down.
Cuando estábamos en el cierre, le dije, un abogado estaba preocupado.
But despite his cold feet, he signed the deal. Guardado's story was hardly surprising to one former Long Beach employee who didn't handle his case but was willing to talk anonymously about fraud in the loan process. How do you feel about the management making the decision to relax the standards to the level that fraud was so easy?
I think it was a huge mistake in retrospect. We didn't verify your W-2s, your tax returns, your pay stubs. You tell us what you make, and we'll believe you.
She said some employees even coached brokers on how to inflate earnings so applicants qualified for loans.
After so much time with the guidelines being as loose as they were, it wasn't crazy for brokers to realize how to work the system. They knew what we were looking for. We were responsible for teaching them what we were looking for.
Long Beach didn't care about the quality of the loans because they didn't hold on to them. Like other poorly underwritten loans, Guardado's was quickly sent up the subprime chain. Long Beach Mortgage held on to it for only a month. Then, his loan was bundled with more than 8,000 others into one huge mortgage-backed security. Wall Street investors snapped up these kinds of products. They repackaged and resold them until the original loans were lost in a sea of exotic transactions. Big banks made millions. But when people like Guardado couldn't keep up with their mortgage payments, the losses multiplied. And banks like Washington Mutual that made the most subprime loans collapsed. When the bubble burst, Guardado's home lost about half of its value at the same time that his construction work was running dry. After burning through his savings, he turned to his credit card to pay the mortgage. When that maxed out, he stopped paying and struggled to feed his family.
Es algo, una pesadilla, pues, de todos los días.
And now Guardado is caught in another twist of the financial crisis. Once he found a new job, he became one of the more than 700,000 homeowners to qualify for a government rescue program aimed at stalling foreclosures by lowering mortgage payments. But so far, the Making Home Affordable program has only made 4% of these loan modifications permanent. Guardado is not among the lucky few. After 5 months, his loan adjustment is only temporary, and he still fears losing his home.
Tiene culpa en cierta manera, pero más la culpa lo tienen las personas que saben la situación. Ofrecen falsas promesas y uno como por ignorante también, ¿verdad?, cae en esa trampa.